One of the things that we have with the Convert the Vert workspace are these shaded or colored zones on your chart. These are called time of day zones. So we've identified, as part of this CTV program, we've identified moments in time during the day when the market tends to shift. One of them is 1:15 in the afternoon, right there. Pull back, confirm, shift. There's another one at 3 o'clock, right there. There's one at 2:30, right there. So we have specific time of day zones, and they're outlined here. I'm not going to get into right now why they shift, how we figured it out. Just know that they do, and it's a zone. So the first thing that we look for is the time of day zone. And so it's 10 o'clock. It's around 10 o'clock. Yeah. It's after 10 o'clock. Price has been coming down. And so you're waiting for the shift. And you're waiting and waiting and waiting. And you're waiting for a few things to happen. One of the things that you could be waiting for is the cycle indicator to get down to the bottom. That could be something. You're also waiting for the shift dots to shift and change. As you can see, they're kind of mishmashy here, kind of up, kind of down, but you're waiting for that moment in time where you can take a trade. So the CTV rules, very simply put, is a time of day zone plus price action. Once you have that, you confirm with the indicators. Now, I'm not going to go over every indicator, and you don't need to even use every indicator. I'm just going to show you three. This one, and this one. And when all three indicators line up and give you the green go, plus the price action rules that I'm going to teach you, you take the trade. That's called the shift. Watch this. It is 10:10. Do you think we're in the time of day zone? Yes. Wait. So one of the things that you'll see here is a yellow line. This yellow line right here is called the pre-market low. And we see price coming down to it, and we think, well, it's going to do one of two things. It's either going to break it and go lower, or it's going to hold to some effect, and then we're going to get our 10 o'clock shift to the upside. And that's what we're looking for. We're looking for a shift. If it breaks through here, continues lower, and then ends up making a lower high, well, that's a different trade. This is simply looking for the shift. Now, there's a few things that we look for. This is part of the price action category. The first thing I look for is a reversal candle. What is a reversal candle? Well, if price is starting here, ending here, is that reversing? No. Starting here, coming down to here, ending here. Well, it's a little bit of a reversal candle, but it's solid. If it's a solid candle, it means that it opened on top of the candle and closed at the bottom of the candle, and that's why it's solid. So you can't have a reversal candle that is solid unless on the way up. You can on the way down. It has to be hollow, because that means that price opened at the bottom of the candle and closed at the top. That is a reversal, right? So these are not reversal candles, but if you look at these wicks that are forming, that is an indication that by the end of the 2-minute bar, price does tend to move up. It happened twice here. Kind of little warning. So you hit the level, boom, waiting. What am I waiting for? All I'm waiting for is a reversal candle. Let's just be really simple and clear. We've already identified, okay, it's 10 o'clock, I'm waiting. ... Now I'm just waiting for price action. So the first rule of price action is called a reversal candle. And it looks like that. Does everybody see it? Why is this a reversal candle? Well, after a bunch of these, Bud, that was for you. After this, right? This is a downward movement, right? Especially if there's a wick on it. Because if there's a wick on it, look at price. From here to here. Is that reversing, yes or no? From here to here, is that reversing, yes or no? Watch this one. From here down to here, all the way up to here and finishes here. Can you see how that is a reversal candle? Yes? Or an uptrending candle? Yes. But that's not enough. What I have proven over my years of dedication and service, that a reversal candle is not enough. I've traded many reversal candles that ended up reversing again and screwing me out of my hard-earned money. So I don't believe in just the reversal candle. Yeah, it doesn't have to close above, Jimmy. However, the confirmation candle does. So what is that? I want confirmation because I'm smart. And I'm not going to just take this one little candle here. So what I look for is a candle that takes out this high and goes further up. Now, do I have to wait for it to close? I don't, but it's nice if you do. So that is a reversal candle. That is a confirmation candle. So if you look here, is that a confirmation candle? Yes or no? No. Is this? Yes. So look, boom, boom, ba-boom. That is a potential shift, isn't it? Okay, but there's a couple of other things I need. I'm going to really distill this thing down for you so that you'll see. And then once I distill it down, I'm going to fly through the examples, like really fly through it. Confirmation candle. So part of this price action that I'm looking for, remember what I said, time of day plus price action, and then confirmed by indicators, only 3 of them. Remember, this is it right here. And then out on yellow or level. This is all of it right here. Reversal, confirmation, I got it. Now I need a moving average cross. And these moving averages, see the yellow and the blue? They're the 3 and the 5. Freaking magic. As soon as they cross and price gets above them, I have now completed my price action evaluation. Boom, boom. And you can see right here, this will happen every single frickin' time. And there's more. There's the wicks. There's the triangle here. There's other rules and tools. But I'm just going to keep it really simple so you can just look at the few that I want to share with you. Because if I can show it to you with 3 simple steps, imagine if you had even more tools, right? Right here. See how these are coming down? See how these are coming down? Boom, boom. Reversal candle. Confirmation candle. Check. And look what happens. They cross right there. They actually crossed the candle before. Now, we have an indicator called MA trend. Now, MA trend is something that you can set on your own, however you like it, but it changes the color of my candles from white to cyan once these 2 moving averages cross. So I don't even have to, is it crossing? Is it crossing? It actually crossed right here. When it crosses back down, look how it turns white. See how it turns white right there? See how it turns cyan right there and white? Pretty cool, right? It just shows me when the two moving averages cross. So all I have to do is go right click, studies, edit study. And you'll see I've got one right here. MA trend. See 3-5, 3,5, cyan white. That just means when the 3 crosses over the 5, it turns cyan. When the 5 crosses over the 3, it turns white. It's an indicator that we created. Beautiful. All right. Price action complete. So now it's time to do what? Now that I've confirmed the potential shift, I got the reversal candle, I got the confirmation candle, I got the moving average cross, and price is above the moving average call. Okay? So now that I've got reversal candle, confirmation, and moving average cross, now I look for my 3 indicators. This is where the magic happens, ladies and gentlemen. This is called a cycle indicator. This is something that we created, something that we coded. Don't ask me how it works. You won't understand it. Either will I. But it is freaking fantastic. So you can see it's red and it's coming down to the green line. Above here is the red line. So if I showed you that, you'd see the red line right there? It's there. Coming down to the green line means if it comes down to here, that means it is ready to move higher. Green means go. When it comes down here, it's ready to go up. When it comes up to the red, means things are ready to go lower. It's a cycle. It shows the cycle of price and volume and volatility. It's fan-freaking-tastic. So that's the first indicator. The first indicator is showing that it's going from red to green. When you see the trajectory of it going higher, green means go, right? So that's the first indicator I'm going to check. Does this look like it's going into an upward cycle? Yes or no? I'm sure all of you would say yes, right? Pretty easy to spot visually. This next one is the RSI. This is the oversold, overbought indicator, but we've coded it special with a 50% line and a moving average and these little green and red bars. When this bar turns green, that means the RSI just went over 50%. When the RSI goes over 50%, that means there's possibly, I mean, this is not an exact science, but I believe there are more buyers than there are sellers. When it crosses over the midline to the lower side, it means there's more sellers. When it gets extreme, that indicates an oversold condition. When it gets extreme up here, it indicates an overbought condition. But I'm not really playing with oversold and overbought. What I'm playing with is the majority. Is there more buying going in versus selling? When it crosses over the 50, to me, that is a second indicator. Can you all see the green bar? At the same time that you got the cycle indicator going up. One more indicator. I'm not going to explain all the dots. I'm just going to share with you that when they're yellow, that's bearish. It means price is coming down. When they all, because these include a lot of different things, the ticks, the volatility index, the advanced decline, the Wyckoff wave, relationship to VWAP, a bunch of other things that are mixed in here and coded. It's called our shift dots. But you can see how they're kind of all mishmashy. Until what? Until they all go solid blue. Do you see where they go solid blue? Right there. Yeah. So a sea of yellow turns into all blue right there. Look at the alignment. All blue dots. RSI went positive over the 50% line. Cycle indicator is indicating a nice trajectory heading up, confirming my price action. Now all I need is a good entry. And look what it does. Boom, boom, pull back to the moving averages. That is called a good entry. This would be a bad entry. Buying it way on the upside like this, better to get it on a pullback, otherwise known as an elegant entry. That's what we refer to it as here. It's elegant versus sloppy, in a rush, greedy, late, early, whatever adjective you want to put. So this is the entry. So I finally got from we're coming up on a time of day to entry. Does everybody see the progression? How we went? Quick recap, how we went through this. Let's see, where can I write it? Here, look. Time of day. I looked for price action. What does that mean? Reversal candle, confirmation candle, and a moving average cross. Then I went to look at the indicators. I looked at the oscillator. I looked at the RSI. And then finally, the dots. And when all was in alignment, all I waited for was a nice, gentle pull back entry. Sometimes there isn't one. It's good if there is. If there isn't, then just wait till it breaks above a level or, but pretty much a pullback entry is the best way. It just gives you a better price. This is the flow.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.